listen. Kevin Hincks, co-host of Fast Market, is with me live at the CBOE. Look, we had a big sell-off last Friday on the heels of the jobs report, and now what a week it was. What do we anticipate?
Good morning, Nicole. Yes, after Friday's violent sell-off, the market has spent most of this week recovering on the upside. You see that from a VIX that hit 2190 to a VIX closer to 16 today. And, you know, on a Friday, if there's a small but modest up day, the VIX could really get hit going into the weekend and be back below 16. So we're certainly watching the VIX today. Earnings, a bit mixed overnight. Like I said, this was a solid week for earnings, not a big week for economic data, but that flips next week. We'll get a big week for economic data with CPI, PPI, retail sales, consumer sentiment. We have a pretty big week for economic data, but not earnings, Nicole. Very light as we get into a little chasm between when large cap tech ends and when we start getting into the U.S. consumer and retail, the second half of earnings season. So, if I look at on there's a fair amount of names, but there's only 166 from the Russell. There's only 7 from the S&P and 2 from the NASDAQ next week. So very light in terms of high profile names for next week. But at least to end this week so far, I thought yesterday was very interesting. The market was selling off most of the afternoon. Then it had if you notice, pretty violent rally at the end of the day, back up to be, fairly positive on the day. So I'm going to watch if that holds this morning. I'm going to also watch crude oil. You mentioned crude oil. What an incredible week. July 30th, it traded 70 and a half. Now it's 64 and change now. So watching crude oil, watching the futures, watching another thing you mentioned, the 10-year yield. August 23rd is the next key date. That's when Jerome Powell speaks at Jackson Hole. So other than everything I just said, Nicole, kind of a lazy summer Friday.
Yeah, look, oil's down over 4% this week, and I did see the 10-year bond yield creeping higher. The idea here was that we were going to more likely get a cut in September from the Fed. Before I get to gold, just a Fed thought?
Well, the Fed is still on track. The percentages for a September rate cut are still extremely high, over 80%. I saw them 87% yesterday. I check intermittently throughout the day. So the odds of a September rate cut are still very high. And, oh, by the way, with Stephen Miran coming on the Fed between now and January 26th, just a very short term, he is a proponent of tariffs and rate cuts. So there's possibly another person who is in line. But if you see it, if you listen to the Fed speakers, they're making that big pivot now towards interest rate cuts. And I expect Jerome Powell's speech at Jackson Hole on the 23rd. Let's see if he pivots, or let's see what he does, which stay very neutral until it's time to move. But I think interest rates are still pointing to a September rate cut, and last Friday's non-farm payroll data just kind of hammered that in, Nicole.
Yeah, I see the percentages here. September is almost 90% likelihood.
Yeah.
Pretty amazing. The question is how much we're going to be doing. You also have the replacement of one person on the Federal Open Market Committee who's stepping down, right?
Yeah, exactly. Again, Stephen Miran. He's currently the chairman of the Council of Economic Advisors for President Trump. So he'll go on. He'll replace Adriana Kugler, who resigned. But her term ended on January 31st of 2026. So for him to come on in a very short-term capacity, President Trump said they're still going to look for a longer-term replacement. But like I said, this is someone from the Trump administration. He's chairman of the Economic Advisors, Council of Economic Advisors. So he's in tune with tariffs. He's in tune with rate cuts. So he's basically someone from the Trump administration. But remember, it's only, 4 or 5 months that he's going to be on. So they're still looking for a head of the FOMC, that surge continues. But it looks like for a short term, it is Stephen Mirren is going to be on the Fed, Nicole.
Right, but just for a short time, as you noted, because her term was up early next year. So, and then I was also thinking about just tech overall. I know Sam Altman was out speaking this morning. Overall, I mean, how did we do with tech this week? When I look, NASDAQ had its best week since June. That's pretty good, huh?
Yeah, when you look at large cap tech, and we're mostly through those earnings, although NVIDIA is coming up on the 27th, so that's what? About 3 weeks away, NVIDIA will come out with earnings. It's interesting. The stocks like Meta, stocks like Google Alphabet, Amazon, they're all holding at their levels. Amazon sold off a little bit after earnings, but Meta jumped on their earnings report, and the stock has held those gains. So the NASDAQ is higher because all these large cap tech names have gone higher. And throw in Apple now, that has had a great week, as you know, and rallied. So there's good news from large cap tech, big things happening. Most of these companies, it looks like, are going to be exempt from any tariffs. That's positive for them. You've got NVIDIA starting the day. Well, it closed about 180. It's about 181 and a half now. So it's up, up about, less than $1, but it's starting the day on the upside. So large cap tech has come through this earnings season relatively unscathed and on the upside. So pretty good news there. The question is, the Magnificent Seven has done okay. Even Tesla is starting to rally now, but what about the other 493? That's where we seem to be running into a more, not necessarily negative, but more of a mixed picture, Nicole.
Yeah, understood. I mean, when you think about gold, right? Gold is at the highest level since June too, right? Yeah. I mean, so gold has had an incredible run. For a while when gold started to pull back, people thought gold was out again. But our guests were saying they would buy it, and they were right. It had a nice run.
I learned very quickly, trading the grain markets and trading commodities, that if you want to get a commodity right, get the dollar right. And there's an inverse relationship between the US dollar and commodities, especially metals, Nicole. So just look at the move in the US dollar, down from 100 to where we are now, about 98. That's a big move for the US dollar, and the chart shows it. That puts a tailwind underneath gold. So dollar going down, gold going up. That's the fundamental trade that is going on right now. There's other things involved, right? There's countries who seem to be collecting gold and storing it, but you don't have to look any further than the lower US dollar to see why gold has been strong, Nicole.
Right, and what are you thinking? I mean, we're really at the end of this trading week and going into sort of a time where it's a little slower. It's not as good of a time for the market if you look historically.
Nicole, as an options trader, my entire career, I always am cognizant of where we are on the calendar. And we are starting August, leading up to Labor Day. There's less overall eyes on the market. As you know, if you have children that were in summer sports, it ended the last week in July. Their fall sports start the second week in August. This is the window where there's probably the least amount of eyes on the market. So a lazy summer Friday is probably what we're going to have. That said, that used to be the complete case. Now the machines don't take vacations, right? High frequency trading doesn't take any days off. And so that doesn't mean the markets can't move, but overall, less eyeballs on the market. I would lower my expectations for these days, Nicole.
Okay, Kevin Hincks, great to see you.